let's start with good news. I have daffodils coming up all over my yard right now, and they're
Yay. Thank
beautiful.
you.
So stagflation is one of those things that you have to have lived through it for a while for it to actually make sense for us to call it that. I don't think we're there right now. So in terms of slow growth, we don't really have slow growth. In the aggregate, US economy is still very resilient. Even if it's a K-shaped economy, it's actually growing at a pretty decent clip. The unemployment rate that we got and the jobs report we got on Friday, I think that's an anomaly, just as the month before's great employment report was also an anomaly. So I think that has more to do with volatility in the data rather than volatility in the labor market. And lastly, inflation is one of those things that can also creep in. I don't think the Fed is looking for a price shock related inflation. I think they're looking for more of a self-propelled type of inflation. So I think it's too early to be talking about stagflation at this time. Maybe a year from now, if we're still in this condition, I think that would be fair.
What is self-propelled inflation? Talk to us about that.
Yeah. So that's the type of inflation where the economy itself is generating the price hikes. So, if you remember a few years ago, the Fed was very concerned about wage increases going up. And that's because if prices of goods and services are going up and the wage increase is going up, then that wage increase then leads to more price goods increase, and then that leads to more. So it's self-perpetuating. And that kind of inflation, it can be taken care of by monetary policy and sometimes with fiscal policy. Oil price shock, that can be temporary. And frankly, with the war going on, it's really one day at a time. So I think they'll be patient on it. And just as quickly as the oil prices went up, if this thing ends, it could also come down. So that's a wait and see.
Yeah, drivers are certainly hoping for that. You look at the average daily gas price, it is now approaching $3.50 when it was below $3 prior to the start of this war. So, Anna, as we look for some of this to kind of settle down, what's interesting, of course, is that the havens, the traditional havens, are not working. Bond prices are down, yields are higher, gold prices are lower this morning as well. And that may just be a knee-jerk reaction to the stronger US dollar. But why are havens not behaving the way they should?
Well, let's talk about that US dollar, right? Yes, I think a lot of it is reacting to the US dollar, but the question is, why are assets going into the US dollar? And US dollar right now and oil futures, those are the two safe havens. And oil futures, it makes sense. US dollar in the narrative of Saudi America, it does not make any sense. So I think on the Treasury side, you've got inflation. That is a worry right now, and certainly the stagflation trade. So the longer end of the curve is going up. It's going against a traditional narrative of safe haven. I think the gold part of it, I think it's just there's a fatigue in buying at this time, and there's a lot of uncertainty. So I think gold it's not like it's dropped all of a sudden, but it has been the safe haven for the last several years. So I think it's taking a pause. So a lot of the correlations that we're used to are not working. Right now, the only thing that is safe seems to be the US dollar. And frankly, if you talk about the global equity markets, US assets are also safe haven. It's losing less.
When you think about when investors are going to have the appetite again for U.S. risk assets, when do you think that's going to be? Because when you think about big tech and investing in AI, you have to be in the U.S. market, do you not?
Yeah, no, I've been waiting for that. So part of the rotations that we've seen in the last month or two, I think that it's just kind of expected in the markets. I mean, you expect the markets to rotate, but in the end, long-term investors, like institutional investors, if they want to be in the AI space and the development, really catch it early, because we are still in the early stages, they have to come back into the US market. So at some point, we're going to get to a point where it's too cheap and investors will come back in. And that is what I'm waiting for.